Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Stock indices hit fresh record highs. Our portfolio. S&P 500 flies. Tip of the week. Trend following on coffee futures. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Short week for the financial markets due to the Easter holiday, and I take this opportunity to wish you an happy Easter. What happened this week? Well, the mini S&P managed to reach new all-time highs, breaking the psychological threshold of 4,000 points. And certainly, in my opinion, this is the most interesting fact of the week. All the European and American stock exchanges are positive, with the Nasdaq that remains the weakest index, while the DAX instead is probably the strongest. As for the bond sector, on the other hand, we have slightly negative returns. We see the T-bond future in this chart, but at least the free fall seems to have stopped. The energy futures, on the other hand, are very strong, in particular oil and its derivatives, while natural gas is the weaker. In general, we see a rebound from the downside of the previous week. This is the gasoline future, and this is the heating oil. As for metals, the strongest is platinum, which marks a nearly 5% return this week. The meat sector is positive too, and in particular Linox, which continues to be at the highest levels in a very pronounced uptrend. As the previous week, we see weakness in the soft commodities sector. We see mixed returns instead for the cereal sector, and the same can be said for currencies. While we see Bitcoin, that managed to recover, now is close to historical highs with an 11% return this week. On the volatility front, looking at the equity indices, we see a level of volatility with very low percentile values, both in the short term and in the medium term. Let's take a look at the mini S&P. Here we can see how the historical volatility is coming back. And if we look at the implied volatility, the situation is even more pronounced because we see the SPX volatility index term structure, which is in full contango, so short-term volatility is lower than the long-term one. In particular, if we take a look at the VIX, we see that it has managed to break a sort of floor, and its price in the last few days is among the lowest values in recent months. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This morning I want to show you two strategies on the S&P 500 future, which was really performing during the last months. And in particular, we can start from this first strategy, which is a bias strategy, because this system do not enter on particular price action levels or on an indicator trigger and so on, but it enters on specific days of the week, and so it will take long trades from Tuesday, and it will close the position on Thursday at the end of the session, while we'll make the short trades on Friday. So today, at a certain time, the strategy will enter short. This kind of system has performed really incredibly during 2020, where this strategy took also a very big trade of over 200 points, so an enormous trade. And we can see that also the equity line is still quite good. We can see here the pandemic period where the strategy was performing really well, in contrast to other strategies that after the pandemic rally, we can say, are now in drawdown. This one continued its rally. We can see the equity curve that is quite good, and the last 2 months the strategy was a little bit in trouble, we can say, but with this last long trade proved that it is still in good health. The annual period analysis also is quite good. We can see that 2020, as said, was a spectacular year, insanely good, with a profit of over $60,000. But also 2021 started really well. Of course, volatility during this year is less than 2020, but the strategy is still producing over $9,000. The last trade, the last long trade was of $2,600, and now we can move to the next strategy, which was also developed on the S&P 500 future, this time on 60 minutes bar, so hourly bars. And we can see that this kind of system that is, we can say, a mix between a trend following strategy and a bias strategy, took a beautiful long trade yesterday, profit target. Of course, during the last weeks, also this kind of strategy, which is not the best solution for S&P 500. We know that mean reverting strategies are quite more interesting on this market, but during the last years also the trend following method is paying a little bit, of course, with also some stop losses. And we can see that during this year this strategy performed really well, is performing quite good, with a profit of over $7,000 already, with commission costs and slippage included, while during 2020 the strategy was a little bit flat, we can say. We just paid commissions and slippage. And so, as said, this kind of strategy is not the best one on this future, but it may help when other strategies, like the reversal strategy, now are performing quite bad, are in drawdown. We can see that this one during the pandemic and 2020 in general was pretty flat, while in the last 2 months the strategy seems to be working again.
Hi everyone, hi from Andrea Unger. Today we will have a look into the coffee C futures. There is a futures that is listed on the ICE exchange. ICE exchange is a derivative markets exchange, and in particular they have listed some widespread and different products such as equity index futures, bonds futures, as well as some other futures and options. And in this case we are talking about the futures on the Arabica coffee, and this contract has a multiplier equal to $375 per points. In fact, we can see here that the contract size is equal to 37,500 pounds, but because of the price quotation is at the cents of dollar, it means that the multiplier value is equal to 1 cent of 37,500. So the Bitcoin value, or the multiplier of the contract, is equal to 375, and the minimum price fluctuation, so the tick size, is equal to 5 hundredths, and it means that each tick's value is equal to $18.75 per contract. And talking about the usual session, usually when we talk about the ICE US markets, we talk about the New York time, and in this time zone the trading hours goes from a quarter past 4 a.m. up to 1:30 p.m. So now we will go into multi-charts and we will have a look to the behavior of this future. And to start having a look to this product, I developed a very simple strategy, and this strategy just simply tries to buy and sells on the extremes levels of the previous sessions. And in this case I have optimized how many sessions I have to consider to create these extremes levels. And more in the details, I have optimized this number of bars, and I found that considering 2 days or sessions, in this case, so taking into account the highest level between the highest high within the last 2 sessions and the lowest low within the last 2 sessions, I would have gotten this result that is the best among those ones. And then I removed also the first quarter of our from the beginning of the session and the last one, just to remove eventually some backtesting errors. And if we would have a look to the equity curve, it seems a very nice equity curve here, and even if some difficult periods have been faced into this backtest, such as here or here too. But if we would have a look to the distribution of the profits among all the different years, is not that bad the situation, and in fact, apart to negative years, all the other years are quite good as results. And this of course is nice because we are talking about a very simple trigger without any kind of filter or any kind of complication. And the initial average trade is also quite nice for being a very simple trigger, and in fact is 235. There is more than 10 to 15 ticks. Of course, there are some negative aspects. In fact, the largest winning trade and the losing trades are extremely important in this case, and they of course have influenced the test. So I would recommend to find a more efficient way to manage the open positions, such as putting a stop loss and improving the strategy in general.
No rollover scheduled for the next week. I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the UNGER method now. You pay only shipping and handling.